Hi, welcome to Funds TV. My name is Hein-Hartmann. This is Alain Rodermann. We're here today to talk to you about the VC, or venture capital industry. This is an industry which is growing at the moment. It's actually has been growing more quickly in the States than it has been doing in Europe. But actually, it is an industry with great potential. And Alain is the managing partner for a company called Expon Capital, and has actually been working in the industry for over 18 years. So I'd just like to start by asking you some questions. I think a key thing for everybody watching this is just really first to understand how a venture capital fund is structured.
Okay, so this is venture capitalists raise funds from institutionals, from corporations, from banks, from insurance companies, and raise money, put this money into a single basket, what we call a fund, and this fund will be used to invest in private companies.
Okay, great. And so that's the distinction between a VC fund and a VC company. So what's interesting, I think, for people to understand is that it isn't actually the fund that makes the investments. They invest into venture capital companies, and it's the companies actually who manage the investments. Could you talk to us a bit more about how the typical VC company is structured?
Yeah, so the VCs watch a number of investment opportunities and decide to invest in something like 25 companies for the entire fund. So the money of the fund will be divided and spread over 25 different investments. VCs will decide to take minority stakes only, so it means that in most of the cases they will never be in a majority position, so they will not be able to decide in place of the CEOs of the investees.
Yeah, so it's quite interesting that they work together, so they use the private capital, they decide which companies to invest in, and I think probably the unique thing about this industry is that you have a way of connecting this great opportunity with pension funds and private investment actually to our economy, to real entrepreneurs on the ground and to people who have great ideas but potentially no financing. And actually the venture capital industry really does make that possible, and through these venture capital firms, I mean, they do take on an element of risk.
Yeah, absolutely. So what happens is that out of those 25 companies, a number of them will fail. Some of them will be very successful. So the statistics are the following. Out of 10 companies, 2 will be very successful, 5 will fail, or actually 5 investments will fail. It doesn't mean that the company will disappear, but there will not be capital gain. And 3 will be so-so, so it means that the money will be reimbursed for those 3 companies. So overall, out of a portfolio of 25 companies, we have enough diversity to make sure that globally the fund will be successful.
Yeah, so it's very important to, I suppose, to make sure that companies mitigate that risk element by obviously first selecting the right partners to work with, but then secondly, spreading their decision making and their strategy over a certain number of companies. So say you would start with 100 million to invest. How would you allocate that in your portfolio?
So we will have 5 years to build a portfolio. It means that we have to select a number of companies in the coming 5 years, about 25, between 20 and 30 actually. And those companies have to be diversified. So it means that they should have different profiles, risk profiles. Some of them will be at the very early stage, others will be at a later stage. Some of them will be in Europe, others will be in the US.
In order to balance
the risk. Mm-hmm. Some of them will be in e-commerce and others will be in semiconductors or in biotechnology. So it means that VC funds has its own strategy and will decide to build a balanced portfolio that will just match a risk profile that he wants to have.
Okay.
In order to make sure that his investors will have money, their money back, and will make a nice capital gain.
Yeah, and that's something which I think venture capital really brings back to our society. And I think that over the years, it's clear to see that this industry has contributed a lot. I mean, we were discussing earlier, but perhaps you could just explain for everybody watching this interesting story which you mentioned.
Yeah, so if you look at what happened with digital economy and all the digital age that we are in today, there are so many things that have changed in the last 50 years, but we have to remember and to mention that it came from a number of entrepreneurs, a small number of entrepreneurs at the beginning. Just an example, in the 50s, William Shockley invented the diode and the transistor, and he started a venture. It was not bad for VCs, but most of his best engineers left the companies to start
other companies.
It was Intel, AMD, and others that have become very big and invented the microprocessor.
Mm-hmm.
And those microprocessors are included in all the electronic devices, the computer, and all the IoT now. And this is a very important part of those equipments. And they are
essential in our society.
Yes, they have enabled actually the entire net economy in the end.
Yeah, I think that there's no way that people could imagine. I think I heard somewhere yesterday that we only had mobile phones for the last 11 years, which is difficult for us to imagine today, that actually this type of technology would not have perhaps even got off the ground without these initial investments.
Absolutely.
So I would say that that's a very big thing that venture capital brings to our society.
Yeah, we talked about Shockley, but there are a number of other super entrepreneurs like Shockley. And what happened in the last years is that we just realized that the venture-backed companies just represent something like 20% of the revenues of the GDP in the US.
Really? Yeah.
20% is a very big number.
Yeah.
And we are talking about dozens of million jobs created in the
as
world
a result of that.
as a result of venture capital-backed companies, yes.
Yeah, and I think a lot of countries and economies now start to take a notice of this industry. Because obviously the way that the world is today, we do need entrepreneurs now probably more than ever. And I think that the pace of change and the pace of new technology is one of these areas where we can really build great businesses. I mean, what would you say if you were going to advise somewhere or some special government on how to actually build up this sector?
Yeah, what is clear, very clear now, is that internet has completely changed the shape of the world. It means that due to the availability of information everywhere, in any countries, in all the countries around the world, you have the ability to capture the information you need. And even capture now the education material you need. Harvard, Stanford, and a number of other universities have put their best course online for free, so you can just have access to education from everywhere in the world.
Yeah,
so
fantastic.
Yes, it's fantastic for the world globally.
Yeah.
And a number of entrepreneurs decided to start their business in their country.
Mm-hmm. It gives them the power, it enables them to
Absolutely.
launch. Yeah.
The big issue with them and for them is to have access to funding, to just materialize their ideas. And this is a really big issue today, is that VC funding is concentrated mainly in the US, to a lesser extent in Europe, and to a very lesser extent to the rest of the world. So the smart governments should act now and make sure that they have put everything together to build a VC ecosystem, just to keep the entrepreneurs.
Yeah, it's essential. No, I think that I hope that people watching this have been aware of how much actually VC has brought to our economies, to our societies, and I think what's key is that venture capital companies, the way that they're structured and the way that they work, are a safe way of taking on the risk of the development and the creation of new ideas in our economies, in our world. It's a really important point actually to mention, because people sometimes are fearful of change and other factors, and I think that it's been existing as long as we have lived, that you must adapt in order to survive, and the same is true in any industry or in any economy anywhere in the world. I think that what VC does is it enables you to access new markets or to build things really at a faster rate. So hopefully it can also be very effective in job creation when the companies are highly effectively built as well.
Yeah, innovation never stops. So if you remember what said Georges Goriot, was the first VC in the US, in Boston, in the late 40s, he said someone somewhere is making a product that will make your product obsolete. So he was already aware about the fact that things go very fast, and you have to go very fast in order to make sure that you are able to develop your companies and your ecosystem. So there is a competition which is now global. It was not global 20
a
years, 30 years
VC
ago.
competition between
competition between startups as well.
Mm-hmm.
So there is place for everybody, but you have to go fast. This is why VC money enables the speed of innovation.
Fantastic. Well, thank you very much for your time today. I think everybody, hopefully, who's been watching this has been, interested in this conversation, and obviously we're very open to feedback. So anyone who would like to get in touch with us at the Fonts TV network, please do so. Thanks very much for coming.
Thanks a lot.